The next mental model that I want to go to that I think you're going to enjoy answering is talked a lot about by, Warren Buffett or even Charlie Munger, but the circle of competence. So I'm curious to ask you, how do you define and expand your circle of competence as an investor? And what strategies do you do to stay within it?
That's a wonderful, if embarrassing, question. And I would answer it to begin with by encouraging all of your listeners in their spare time. They have more spare time than they think, by the way. Turn off the TV. I would encourage them all to read Warren Buffett's letters to shareholders beginning in 1977 till the current. They're at the Berkshire Hathaway website and they're free. What you have is in effect a biography or an autobiography from the greatest investor in my memory for free. And people need to do that. What Buffett wonderfully says is if he can't understand the outline of a story in 10 minutes, he won't invest. If he has to know so much about the value proposition that he isn't certain of his ability to grasp it, because there are so many opportunities in the world, he doesn't care. He'll pass and wait for an opportunity. Buffett famously says, and I think this is important to the lesson you're asking me to teach, that the investing business is analogous to a baseball game with no called strikes. In other words, if you don't swing and miss, no bad thing has happened. Every pitch that gets by you doesn't count against you. The consequence of that is that to be a good investor, you play baseball by waiting with your bat, which is your money. You wait for the pitcher to get tired. And when there's a nice, slow, fat pitch, you whack it out of the park. You operate within your circle of competence. Unfortunately for me, Mr. Buffett's circle of competence is much wider than mine. As a young man, I enjoyed truly spectacular success in the natural resource business, not understanding that it wasn't a consequence of my competence, but rather a consequence of coming of age during the bull market of the 1970s. The gold price went from $35 an ounce to $850 an ounce. The natural gas price went from 30 cents a thousand to, at least with regards to deep gas, $15 a thousand. The oil price went from $2 to $30, and I thought I was a genius. By the end of that bull market, when it busted, I found out just how smart I was, which isn't to say very. But let's go on. As a consequence of being successful in natural resources, and a consequence before that of being successful in the hospitality business as a young man, I decided that I was a good businessman generally. And I dabbled in businesses as widely diffused as motion picture production finance, real estate, a variety of businesses. And the consequence of that is that I learned just how smart I was, which is to say, not very. What I have learned in 45 years of investing is that there are roughly 3 schools of investing that are suited to my education, my experience, and my psyche. And they are as follows: illiquid deep value, specifically in very bad markets, cash flow positive, mundane companies that are selling at a discount to net working capital, which is to say where their inventory and their cash is worth more than their enterprise value, their market capitalization and their debt. And you're getting the free cash flow for free. I don't need much competence there. I once owned a liturgical candle maker. I don't know anything about making candles. I don't know anything about church. What I do know is that the company had working capital exceeding $20 million, and they had an enterprise value of $12 million, and they were earning $1 million a year. In effect, the earnings were a free bond. So nets are within my circle of competence, within my circle of patience. I can participate in those businesses. Much more commonly, I've spent 45 years coming to understand the natural resources business. It's within my circle of competence. If I don't know somebody in the natural resource business, I can call somebody who knows them. And frankly, if I can't do that within 2 calls, they probably aren't worth knowing. I don't have to waste any time on them. I understand too the nature of cyclicality in the resource-based business. I understand enough geology, I understand enough engineering, and I understand the contrarian thesis in the fiber of my soul. So natural resource-based businesses are within my circle of competence. Further, I have the discipline to understand that when an industry is in liquidation, which is to say, when the product price is less than the total cost of production worldwide, rather than being a bad thing, when the industry is in liquidation, it's a good thing. Because if the price doesn't go up, humankind is denied that product. For all of those reasons, I'm a competent natural resource investor, and I'm willing to take more risks in resources, and I'm willing to exhibit more patience because it's within my circle of competence. I can outcompete other investors in natural resources. Similarly, in conventional financial services, I have invested in and operated property casualty insurance companies and reinsurance companies, investment banks, wealth managers, asset managers, conventional banks. I mean, ironically, at age 70, when I ought to be retiring, I'm starting a new bank. I'm comfortable in conventional financial services. I am not comfortable in fintech. There are younger people who are more facile with technology and the applications of technology than I. And I don't try to compete with them. The idea that I would try to compete with, say, Elon Musk in terms of converting Twitter to an online bank, the probability of my successfully competing against him or even understanding his ability to compete in that sector is nil. My ability to compete with Bank of America and Wells Fargo in starting a new bank, while I understand that I can't compete with them, I also understand that they can't compete with me. So conventional financial services, be it banking, be it investment banking, be it asset management, be it syndication, be it wealth management, well within my circle of competence. I have invested in those businesses for 45 years. But more importantly, I have started and managed businesses in those sectors. Beyond that, I have to be very careful. For me, most of my general market securities portfolio is Berkshire Hathaway. The idea that I can outguess Buffett, the probability that I can outguess Buffett on the broad economy is nil. And I have come to understand that because Buffett's business is structured as a reinsurance business, that he can wrap that investment prowess in a tax wrapper. In other words, he can use policy loss reserves and policy acquisition costs to shelter the operating earnings of See's Candy and Burlington Northern Railroad. So I actually get to employ Warren Buffett as an asset manager in an efficient tax wrapper. Why would I seek to compete with Buffett when he's better than I and I don't have the tax wrapper? Similarly, for the rest of my general securities portfolio, personally, I invest in global ETFs around the dividend aristocrats, which is to say very, very high quality companies that have met or exceeded their dividend expectation every quarter for 30 years. While I could go wrong occasionally with that, the idea that extraordinarily durable businesses, Procter & Gamble, Shearing Plow, companies that generate a ton of free cash, companies that are global dominators that other people can't compete with, at least in the near term, and companies that are polite enough to share some of the benefits of that competence with me by way of dividends, I don't need to exhibit, an awful large circle of competence to invest for the very long term in the finest companies in the world, or to invest in the broad American economy, utilizing Warren Buffett as a stock picker in a structure that's tax advantaged. You follow what I'm saying?
Yeah.
I might get an idea outside of my circle of competence, and I don't care. It's not worth my while to spend the time to compete with people who are better than me when I could spend the time in the oil and gas business, or I could spend the time in the super catastrophe insurance business, or I could spend the time in the wealth management business. The idea that I would waste a lot of time in a competition where I'm not one of the best competitors is something that makes no sense to me anymore.